all my chat, through all pain, I'll bless your name forever remain. Welcome to Being Real Estate Smart by Alan the Prince. In this show, we'll be shedding light on all there is to know about real estate so as to make your home ownership and investment journey, especially real estate investment, seamless. And of course, being our first episode ever, we are thrilled, more than thrilled to have you. Are you new to real estate? Are you thinking about diving into this world full of opportunities of real estate investing but feeling a bit lost? Know this, you are not alone. This video is actually perfect for you, full of essential tips and tricks to help you navigate the exciting and somewhat overwhelming landscape of property investing. By being here today, essentially you've taken the first bold and important step towards building wealth and securing your financial future. As they say, knowledge is free at the library. Just bring your own container. And here at the Topmost Top Real Estate, we are your real estate library. The world of real estate can seem overwhelming at first. With the right guidance and resources, you can navigate this exciting landscape with ease and confidence. Understanding the basics is essential, whether you're dreaming of flipping houses or building a rental empire. We'll break down the basics and arm you with the knowledge you need to make smart decisions. So, are you ready to unlock the secrets of real estate and start your journey towards financial freedom? Let's get started. Starting your journey in real estate investing requires knowledge in key concepts, market trends, and investment strategies. From identifying the right properties to understanding the right financial options. These are the critical steps to success. This video will provide you with valuable insights and a few practical tips to help you embark on your real estate investment journey effectively. You'll discover how people are building wealth through real estate. But a word of caution, this is not for everyone. I'll walk you through the advantages and the challenges of real estate investing. Then you can decide if this is a good fit for you. Did you know? A surprising fact about real estate investing is the rise of real estate crowdfunding. You may ask, so what is crowdfunding? This model has exploded in recent years, allowing everyday real estate investors to put their funds together to invest in large-scale real estate projects, something that was once reserved for the ultra-wealthy or institutional investors. Crowdfunding platforms lets investors contribute small amounts to gain exposure to commercial real estate, residential developments, and even international markets. It's been a game changer for those who want to enter the real estate space but don't have the capital for full purchase of a property or don't have the time to manage the property themselves. So, have you ever thought of jumping into such an investment? Or are you just inclined to the traditional methods of real estate investing? Drop your thoughts in the comment sections and let's see what you think. In today's episode, I'll be focusing on rental properties. And the concept is actually very simple. There are only three things that are happening. One, you are renting out your property. First of all, you are renting out your property. Second, your tenants are paying you rent enough to cover your expenses, essentially paying off your mortgage. And third, your property appreciates in value over time. Essentially, that's how you build wealth. So the process is actually very straightforward, but let's just dive deeper. So today, I'm going to show you how real estate investing can build you wealth, break down the math behind it, compare it to stock market investing, and also share at least 10 important tips that will save you money in the long run. You need to hear this. It's tried and tested. So let's start by looking at the numbers with an example. So let's just imagine you have 30,000 USD to invest. So what are your options? You could put that money in the stock market or in a savings account in a bank, or you could invest it in a rental property. So for the rental property example, you use the 30,000 USD as a down payment on a 300,000 USD valued property that you plan to rent out. So with a 30-year mortgage at a 4% interest rate, your monthly mortgage payment would be 1,289 USD. Add around 400 USD for property taxes and about 250 for insurance, bringing your total to around 1,939 USD. If you can find a tenant who pays at least that 1,939 in rent after 30 years, you'll have paid off your mortgage. Let's assume the property appreciates at 4% per year. So after 30 years, the property could be valued at 973,000 USD. So your 30,000 USD down payment has grown to 973,000 USD, giving you an annual return of about 12%. So how does this work, you may ask? The key is leverage. When you buy property, you're not just gaining value on the 30,000 USD down payment, but instead you are benefiting from the full value of the property that you put down payment on. That is the 300,000 USD value of the property. You get? So that if the property appreciates by 4%, your 300,000 appreciates by 122,000, not just the 30,000 you invested. You get? Yes. But you might be wondering, is 30 years not a long time? And what if inflation reduces the value of the property? While inflation is a valid concern, owning a property in times of inflation actually works in your favor. What do I mean? Your property is likely to appreciate at a higher rate than inflation, hence protecting your wealth. Plus, by owning the property outright in the future, it saves you from debt and makes you more financially secure. Now let's compare that with stock market investing. If you invested 30,000 in stock market, assuming a 10% annual return over the next 30 years, your 30,000 USD would have grown to 523,500 USD. In contrast, the rental property grew to 973,000 USD. While stock market investing may offer a higher rate of return, it doesn't offer the same leverage. Your 30,000 is growing in value, not the 300,000 value of the property. That said, there are risks in real estate investing, just as there are risks in every other type of investing. Things can go wrong with the tenants, repairs, or even market crashes. Similarly, just as I said, the stock market also has its own risks. But real estate is a tried and true investment, and if done right, it can build you wealth even faster than the stock market. Now, to avoid costly mistakes, I'm going to share with you 10 essential tips in real estate investing. Please be keen. Number 1, use a limited liability company. What do I mean? Protect yourself legally by operating through a limited liability company, without which you risk your own personal liability, which could put your home, savings, and even assets at risk. If you're transferring a property to a limited liability company, make sure you follow the right steps, especially if you have mortgage. You can consult your lawyer to guide you in this whole process so that you do it correctly. Thing number 2, get landlord insurance. You'll need a landlord insurance to protect your property. That is apart from the renter's insurance, which will cover your tenants. This is your first line of defense against liability. The other thing, screen your tenants. Finding good tenants is crucial. A bad tenant can be a nightmare. Late payments, unpaid rent, property damage. Run credit and background checks to avoid red flags. The other thing, consider hiring a property management company like us. If you don't want to deal with the tenants directly, you can transfer that responsibility to a good, reputable company to do all that work for you. But of course, at a fee. Just make sure the fee makes sense to you and your finances. Number 5, act quickly with problematic tenants. If a tenant isn't paying, take action immediately. Legal action may be required, but the sooner you act, the less costly it will be for you. The other thing, know the security deposit rules in your area. Understanding the laws around security deposit in your area is very important. Some areas have very strict rules and regulations that when you violate, it can be very costly to you. Number 7, find a good deal. Before buying property, crunch the numbers carefully. Make sure your property's rent covers your expenses, and at least compare your property with other properties around, so at least you are sure that your investment makes sense. That thing, build a good credit score. A good and strong credit score will help you secure better mortgage rates. But if your credit score is low, just work on improving it before making a big investment. The other thing, don't worry too much about taxes. Don't stress about taxes for your rental property. You can deduct expenses like mortgage interest, property taxes, and repairs. Plus, you're likely to benefit from depreciation, which lowers your tax liability. Use a like-kind exchange while selling. What do I mean? If you sell your property, consider using the proceeds to buy another one through a like-kind exchange to avoid paying taxes on the gains. If you hold on to property until you pass it on to heirs, they are likely to benefit from tax exemptions under current estate laws. In conclusion, I have outlined how real estate investing can build you wealth. I've shared its costly mistakes and provided insight into pros and cons. If this still seems overwhelming to you, you might just prefer to invest in other options like retirement accounts or the stock market. But if real estate sounds right for you, go for it. Once you get the hang of it, it becomes easier and easier, and even open up new investment opportunities for you. Thank you so much for watching. And if you found this video helpful, please subscribe. And I wish you all the best in your investment journey. See you next week, same time. God bless. Cheers.